Stock market today, analysis for October 12th, 2022. We got the Nasdaq down 0.09%, S&P 500 down 0.33%, 10-year U.S. Treasury yield down 4.2 basis points, gold down 0.25%, Bitcoin up 0.76%, oil down 2.61%. More trouble over across the ocean in England with their bond markets. Who knows? Maybe trouble in a bond market might be coming to your neck of the woods. I know what's definitely coming, not a maybe. What's definitely coming are more earnings reports. Tomorrow, this is who reported today. Tomorrow we have this wonderful list of companies reporting, with this one might be potentially could be a market mover. And if you're a little hungry, Domino's Pizza is going to be throwing their hat in the ring there. And then potentially more market moving information on Friday with all these banks reporting. So, my friends, this is the Chicago Board of Options Exchange Volatility Index, wonderfully known as the VIX. Quite a few years ago, I started hearing the saying, when the VIX is high, you buy. When the VIX is low, you go. Now, I don't know if that holds true anymore, but you can see this is the VIX from what time? Going back to about 2015 or so. And here's where we are right now. You can see this really high, and some people would call this the fear index. This is kind of gauging investor sentiment of not necessarily happy. And what you can do with these free Yahoo charts, you can look at the VIX and then click on this button, comparison, and pick something to compare with. Let's look at the S&P 500. And now we see the VIX in this darker blue and the S&P 500 in this lighter blue. And you see as the VIX goes up, the S&P 500 goes down. When the VIX spiked up really big right here, look at this big quick drop in the market here. So this is a fear index, volatility index, and generally speaking, it's a good resource to look at and consider. When the VIX is high, you buy. When the VIX is low, you go. So if you would have been following that that strategy, which I don't necessarily say it's the be-all end-all strategy, but just with hindsight, which is always 20/20, if someone were to do that right here, the VIX is high, they'd buy at this peak, and then they follow this up for a while, and the VIX is low, maybe they decide to sell somewhere in here. Who knows? I don't know. I don't necessarily base any trading decisions over it, but it's definitely good to look at about the overall fear index. And so we're right here at 28, and then there's a lot of people that talk about when it gets to 40, around 40, then it's a lot of things selling off. But we've already been selling off quite a bit in the S&P 500 or the whole overall market. So the VIX closing at 28.87. It's creeping up. We'll see if it's gonna get up here around 45 or so. Also, we have our handy dandy risk indicator, the MMRI, closing at 274.4, which is down a little bit from yesterday. It closed at 277.1. This little small fluctuation, I think when you put it in a comparison with what's been happening since I started graphing this August 29th, you can see overall that little small dip is kind of meaningless in comparison to we ended the month of August in this low range from 200 to 300, which is, according to this, high risk. And now we're in the high part of that, moving slowly moving towards this 300, getting into extreme risk. So if the VIX kind of keeps moving up, if this keeps moving up, just by looking at these two things, we're kind of already on shaky ground, right? Look at when the VIX was down here. Maybe I don't know. I don't know where's a good place, a good place for it to be. I just know when the VIX is high, you buy. When the VIX is low, you go. But that'll give you a resource to play at. Things are just looking shaky. You look at all the news going on. Things are looking shaky. We got the 10-year U.S. Treasury yield closed down just a little bit, but we're kind of knocking on 4%'s door, right? Down just a little bit, 0.94%, but we're creeping up towards that 4. And let's look at the market overall. S&P 500. What happened with you? What happened with you, S&P 500? I don't know what happened with you. I do know what happened with you. This is what happened. On our Pro 2 chart, it's still in this, good strong downtrend. We got this wide gap. It doesn't even seem to be slowing down. It's probably going to stay stuck below this oversold portion for a while. And kind of had a kind of a nothing day, just kind of moving sideways. But even with this kind of moving sideways, there's a little less volume, but there's still a high volume of selling, not reaching the daily average though. Same thing here in the technology sector. We got that downward trend still going on, which you can see the weekly stochastics slowly starting to tighten up, but it's still pretty well gapped. But maybe, just maybe, things are slowing down. Based on these candles, the momentum is slowing a little bit. However, with these earnings reports coming up, especially the banks reporting on Friday, and then was it consumer price index coming out tomorrow, and there was a producer price index coming out today. So maybe big institutions are just kind of waiting to see what's going to happen. That wouldn't be a shocker based on what we're seeing. Now here with healthcare sector, we definitely had a little more movement. You can see we got some wider range candlesticks, but it's still just kind of going sideways, staying stuck in this range here, and money flowing out. Looks like that weekly stochastic might be trying to tighten up, but until it does, and even if it kind of crosses over, look what can happen. So stochastics, if you got a good strong trend one way or the other, that's a good indication. But again, these stochastics are lagging indicators. This is right here. This is your current indicator, what the price is doing, and possibly the picture of this candle. I don't know if it's possible, maybe it just is. So what do we see with us? Today it opened here, traded up to this little resistance place, and buying pressure just pushed it all the way down. No tail at all hanging off at the end of this, so price movement was just pushing it completely down. And in the financial sector, which as I mentioned, we got all these banks reporting. The financial sector, we got this strong trend to the downside on that weekly, money flowing out. And we got this little candle there with, look at that, 2 days in a row of more higher than average volume, and it's all selling to the downside. Although the candle doesn't really represent that, but we see in this candle that it's all at the bottom of today's trading range, right? So, and it opened and closed below yesterday's weak little candle. So we got some buying pressure going on, but selling pressure is taking it over. That's what's making this longer wick to the top. And then with consumer discretionary, hey, look at that. Finally got something green on the chart, but it's not up here. It's definitely a downward trend in this long-term trend chart. And we got a little bit of green. We look at all that volume came in, but look, it didn't really do much on the actual price movement. Real doji action. doji being like a almost opening closing in the same spot, and kind of this equal trading up and down to the range. So maybe it was a little more on the downside, but just kind of eyeballing it, looks a bit like a doji. We've got a lot of, if you look through here, we kind of have a lot of doji looking candles as prices just kind of have been floating down, just kind of slowly floating down like a little butterfly. And the IWM, same story over here, strong trend to the downside, and we got this kind of weak candle. A lot of these stocks representing these sectors looking like weak candles, and it could be because people are holding off to see what these different reports are going to be before they start committing anything. And the consumer discretionary ETF is really just going sideways in this range. All right, here it is. Here it was back on September 23rd, and it's basically in that place October 12th. So it's kind of just gone up a little bit, down a little bit, but overall gone sideways. Good amount of buying volume coming in yesterday and an equal amount of selling volume coming in today, and it just went sideways for 2 days. Look at that. Great doji looking candle. It's like even on both sides, open and closing in a very similar spot. Qs. Again, we got this downward trend on that Pro 2 showing the big picture. It just continues to have the strong downward trend with money flowing out. And we got this little itty bitty little candle. Even though our volume wasn't like super low, it was definitely lower than the daily average, but just kind of a sideways trade. And sideways, but still floating, floating down just a little bit, catching the support area. The dollar via UUP. Dollar continue to kind of just doing the opposite of everything else, because, is this a direct correlation? I don't know. You be the judge. But if you have a strong dollar, what does that mean, strong dollar? Let's put it into as much layman's terms as I could possibly do. The value of the dollar can buy more stuff. If you have the value of the dollar buying more stuff, then it would take less dollars to buy stuff. What if this stuff we're talking about is shares of a stock? So if you have the value of your currency really strong, then it takes less currency to buy a share of stock. So is it that the company is actually less valuable, thus reflected in their share? Is that what's going on? Or is it the dollar to share exchange ratio is changing, and now it takes less dollars to buy the same share? You kind of have to be the judge of that. But if that were true, that the value of the actual share of stock is still the same, the company is fundamentally the same, and things like that, profitability, financial statement, everything like that, fundamentally the same. It's just that the price of exchanging currency for a share of stock, that has changed, and now it takes less currency to buy that share of stock. Depends on what you want to do, what your long-term objective is, but maybe if you, like for example, if you wanted to build a strong dividend portfolio for the next 20 or 30 years, maybe it'd be a good time to accumulate some stock. Maybe not. It depends what you want to do. If you want to be day trading and you don't want to own stock, you want to increase your number of fiat currency at the end of the day, then maybe you'd want to do a different thing. So just something to think about when it comes to prices and value and all these type of things, because we tend to get really stuck on the market's crashing, the market's going down. Well, is it? Is the market going down? Is it really losing value? Is it really crashing? Or is the value of the dollar going up, and by default it takes less dollars to buy? You be the judge when that is relevant. And maybe you could have a downward market where sometimes that's relevant and sometimes it's just a crappy company. Or not even necessarily a crappy company. Maybe it was, maybe people were paying too much for it in the past and now it's coming back to normal prices. So there's all these different factors that go on. And depending on how you are going to be approaching trading or investing, you need to think these things through for yourself and come up to your own what seem like good decisions and conclusions to figure out how to take action in the way that's going to benefit you through the long term. TLT, which is representing 20-year bonds. So we looked at the 10-year treasury. Now looking at 20-year bonds, not necessarily the rate, but this equity kind of measuring them. So look at that. Weekly stochastic I was just touching here. It's like, what's this going to show us though? One thing we might learn out of this is that just because these two lines touch, it can still keep going down, right? Because that's what's happening. So when you have this wide gap between them, that's showing the strong trend, right? Strong trend to the downside. Right now they're touching, it's still going down. So, and not only is it still going down, it looks to be separating again. Now, sometimes when they start touching, then they cross over. They can't cross over until they're touching. And right here, there was like you could say maybe a false positive. We thought it was going to go up, but it ended up going back down. So it can also be doing this, for a long time, kind of cruising around the bottom. And that is what has been happening since around in this time area, which was, what is this? Around January, sort of the end of January, beginning of, when did this really start? Look at that. Look at that. So this is really a good, when you see a crossover like this, and it's towards the top here, and you got that good distance, and you see that strong downtrend. That's a good indicator of a good short position, whether you want to do it through options or shorting stock or whatever you want to do. But that's a good strong one. Down here, that's not really giving you the same sort of something to rely on. And then we saw it go up here, but it was coming off the bottom, and then it got around this 32% and then petered out. So that's what can happen. But on all these other stocks that are making up the all these different stock sectors making up the S&P 500, we mainly see something that looks a lot different, right? There's a real strong trend to the downside still happening. And so 20-year bonds still kind of moving down. And personally, I don't trade this. I'm just kind of looking at it to get an idea of, in a nutshell, what seems to be going on is that if this is going down, the stock market's going down too. If this starts going up, it seems like the stock market's going up too. Does it work? Like, is it that correlated? Is it that black and white? Probably not. I don't know if any of this stuff is. Or sometimes it can be, but sometimes it gets disconnected. So it's just more information to look at and try to be better informed. Speaking of looking at and being informed, let's look at and be informed on oil. Now, oil had a pullback over here, and golly gee, I hope it stabilizes here. That's what I'm hoping for. I've got a long-term put option sold on this right now, and when it's doing this pulling back stuff, it's not helpful for my margin. And so, but nonetheless, like we're in this range, right? Here we are. You can see that in this $85 area, it's got this range, and then it's got another range at the top. So this one, we got the bottom is at like 85, and then the top of the range is up here around 94. And then you got another range that the top is 85 and the bottom is about 76. So right now it's testing the bottom of that range. And basically, we're looking at 3 months. What has it done in 3 months? Went sideways. It went up and down in the meantime, but the net result is, look, it's at 85 bucks. Here it was at 85, right around 85 bucks 3 months ago. So been going sideways. What do people like to do in sideways markets with options? They like to sell iron condors, they like to do credit spreads, but I'll tell you what, the only way you should be doing that with the futures market is just in your paper trading account, because boy, you can lose all your money and more really quick. Really quick. You want a quick way of going broke? trade in the futures market when you don't know what you're doing. That's a quick way to the poorhouse. So you want to play with that? Just do that with your paper trading account and learn and go from there. You know, maybe paper trade on oil futures for 12 months. If you think that's too long, then a good thing that you never wanted to be a doctor, right? Because you probably have to practice for over a year before they let you start cutting people open. So consider paper trading if you want to have some fun in the oil market. Do not trade your real money if you don't know what you're doing, because you will lose a lot of money really quick. GOLD. GOLD, now instead of just going sideways, in the 3 months, we're down, right? And it's sort of similar where it's got this range. Here's the top of the range, just like around, let's say, 1800 to 1820. Like the top seems to be 1820. And then it's got this little 1820 to about 1760, and then you got the top of this different range about 1760 to about 1720, and then or maybe about 1760 to about 17, and now we're in this kind of 17 to about whatever 16 something, and I'm kind of testing the high range of that. But overall, you see went down a little bit, which you can see that reflected really quickly in your 50-day moving average here, or the 20-day moving average. And so lately, in the last, whatever is this, like month or so, it really just has gone sideways. It went down, it went up, but look at that, sideways. Also, if you feel like it, in your paper trading account, paper trade options on gold. It never was exciting for me personally. I didn't feel like it was there was much going on. Maybe paper trading the straight futures on gold. But if you want some action, you want some like you want to take advantage of the price action of gold via the financial markets that you can do online, and maybe consider some sort of maybe ETFs or gold mining stocks. They're kind of a little niche in their own. You have to learn about, you know, and one thing you have to be careful of is that people really become hyper focused on them, and you just be careful. I mean, I've done it, and you got to figure out what's going to work for you. What is it? Why is it you're trading? Why is it you're trading? Really get clear on your why. One time I heard something really spectacular. It doesn't 100% apply to this, but maybe you can figure out a way to maybe not get 100% application to our situation, but if you get over 0, then it might be worth it. Those that know how work for people that know why. Those that know how work for people that know why. So you got to know your why. Have to know your why. Why are you looking at these charts? Why are you putting money into a brokerage? Why are you doing this stuff? Is it to collect income on a regular basis? Now that might be, you might take different strategies than if it's to create capital gains. Now you might think, hey Brent, those are both the same. Capital gains, income, it's both the same. It depends on how nuanced you're going to look at it. Also, there's just some nuances, right? So like I was saying, try it out, see if you like it. Make sure you're paper trading it, because when it comes to the futures market, I'm telling you, you're going to lose money quickly. More than likely, that's what will happen, is you will lose money quickly. And one thing that you could do with potentially looking at in the stock market some sort of gold related equities, you could do this basic thing, which would basically be waiting for something to propagate here. We're going to be waiting too long because it does not have that. So let's go over here, and we'll do this. Maybe we can do this. Hopefully we can, otherwise I'm just wasting time, and to be quite honest with you, my windows are closed and it's really hot in here. So can we? Yes, maybe we can. Let's see. GLD. So generally speaking, right? Okay, so we got our UUP is this darker blue. That's representing the dollar. And GLD, this ETF representing gold, is in this lighter blue. So generally speaking, dollar up, gold down. So how can you do that? You see that we've been looking at UUP for I don't know how long now. You see it going up. All right, if it's going up, then figure out how to get into some short positions on either gold ETFs or the miners or whatever. Probably might be test things in your paper trading account, but might be a little easier to use the ETFs for something like this. Because with ETFs, you don't really have to worry about earnings reports, and you don't have to worry about weird company management scandals and stuff like this. But you got to worry about some other type of scandals. But the ETFs seem to kind of eliminate some of that stuff, the normal kind of things. But I'm sure if we dug hard enough, we'd find some scandalous ETF stuff going on too. But that's something you could potentially look at. That's gonna it's more defined risk versus when you're in the futures market, it's undefined risk. Like I'm definitely not a futures master by any means, but I have paper traded selling options on a WTI crude oil for like 8 months straight. That was the only thing I was doing. I was not trading real money, and I was not looking at anything else. I was only watching oil, and I was in my paper trading account figuring out how to make it work for myself. And one thing that I could never really figure out, and even when I would call the broker trying to figure it out, they couldn't give me any information that really helped me. And that is basically the margin requirement. When I first would open a position, there'd be a certain amount of margin required. And like if you're going to buy a stock, like let's say you're going to buy, let's just pretend this gold future was a stock. Well, you would need about a little bit over $1,600 to purchase the share. And then if the stock moved against you, you wouldn't need to bring more money to the party in order to keep playing. You wouldn't need to do that, because when the stock market, you buy how many ever shares you can buy, you pay one time, and that's it. But when it comes to the futures market, it's a different story. There's this thing called margin. So it's not that you're buying this, you need to have a certain amount of cash on the side to keep your position open. And if your position's going against you, that required amount that you need to have on the side increases. So I would call them up and be like, hey, if oil is going to move against me by 10%, what is that going to do to my margin? Does that increase my margin by 10%? And I just basically could not ever get a straight answer, so I couldn't really figure it out. So I'm trying to formulate these positions like, hey, this is how much money I have in my account. If it moves against me this much, and trying to figure out where's the safe place for Brent to be playing in order to reliably, consistently make money. And it just got to be that I was, what worked well for me is erring overly uncautious. So there's just some complications to it. And I'm guessing you're watching this video because you're relatively new to trading. So trust me, do not be trading real money in futures. You're going to lose it. So just lose the fake money. Now this is what you're waiting for, isn't it? I know you were waiting for this. I could hear you beating on your computer screen saying, Brent, hurry up, get to Bitcoin. That's why I'm here. Here we are at Bitcoin. Bam, it's going sideways. What is going on? What's going on with this? You know what? Where did all those people go on YouTube? They said Bitcoin was going to the moon. They said it was going to be $1 million in 5 seconds. They said that. Where are they? Where are they now? Crickets. Crickets. Jiminy crickets. That's all we hear. Now, once in a while, I think I've seen somebody come on Kitco talking about Bitcoin. It's going to 100,000 by the end of October. It's not. It's not. Look at, hey. So anyways, like I've told, if in case this is your first time watching this, I'm totally neutral on Bitcoin. I don't care. I would like to trade it. I live in the state of Hawaii, and they don't let me easily trade it. I don't know why. I really want to know, because when I was growing up, I was told I lived in a free country. But you're in a different state. You're allowed to trade it. I'm in Hawaii, and I'm not allowed to trade it because I don't know. I really don't know. They've got some reason. But anyways, I wish I could trade it. I don't. and because it you know, places that I want to easily be trading, like via Tastyworks, they won't let me do it. They being Tastyworks won't let me do it because I guess Hawaii doesn't let them do it. I don't know the details to it. I just know the net result is that ever since 2016, when I was trying to trade Bitcoin, I was not having any luck, and it seemed like I needed to jump through a lot of hoops. So I stopped, and I just started focusing on things that I don't need to jump through as many hoops to do. But we see it's not able to. Whenever it gets close to this 20,000 or goes over this 20,000, it keeps breaking down. And you see this is a 200-day moving average, and that's a pretty, it could be more of a steep incline, but that's a pretty steep incline, and it's just going down. So 50-day moving average going down, 20-day moving average, 50-day moving average is kind of like this midterm, medium-term trend, and the 20-day moving average is a shorter-term trend, and it crossed over here. It's been going down. It rallied up here, couldn't tested that 50-day, couldn't maintain it, and it's been basically under the 20-day for a while. It went up here again to test the 50-day, couldn't maintain it, and super light volume, but nothing exciting going on there. Who knows? Maybe it's just going to trade sideways forever. It would seem though that if it can't go up, then by default it'll go down. Maybe not. Maybe it'll just, for several years, maybe it'll just kind of be in this trading range. And if it is, and you have something like Ledger X, where you're, last time I checked, Ledger X was a kind of like a brokerage that allowed options to be traded on Bitcoin. I heard that the spread between like what you can buy and sell for, though, I heard it's really horrible. But I haven't tried it. I haven't even looked at it lately. I used to look at it a couple years ago and looking to see if it'd be worth jumping through hoops and getting some money in there, but I just decided to trade other things. But if you already have that, or if that's something that you don't necessarily have to jump through hoops for, I don't know if they would let you sell credit spreads on it, or what. And I don't know if they let you do some sort of paper trading. I think that's a thing too. You've probably heard me say this a couple times, maybe more than a couple times, but paper trading. Telling you, paper trading is the way to go. Now, obviously, it's not that you're only going to paper trade. Sooner or later, you're trading real money. Right now, I'm paper trading more than I'm trading real money, because anything that I think of, like for me, my situation might be a little different than you. I live in Hawaii. I am in Hawaiian Standard Time Zone. The stock market trades in Eastern Standard Time Zone. So right now, for example, you see it's 1:51 p.m. Hawaiian Standard Time. In New York, it is 7:51 p.m. So a lot of people in New York, they're winding down for the night. Like my day is just in the middle. So when the stock market opens, the stock market closes. It's like the stock market opens, depending on daylight savings time, the stock market opens at 3 or 4 in the morning for me. And then it closes at 10 or 11 a.m. for me, depending. In Hawaii, we don't change daylight savings. In the mainland, they do. So depending on what daylight savings time the mainland's on, it's 3 to 10 or 4 to 11. And I used to wake up 3 in the morning and be trading, and it just was not good for my health. It was not good for my mood. There was nothing good about it except for making money. And then maybe you think differently, but for me, my health and my happiness is more valuable, because being healthy and being happy lets me make more money. And you know what? Even if I don't have money, if I'm happy, whatever. So I just decided I got to find workarounds. So I'm dealing with some stuff, and I've got I take jobs that require a lot of mental power while I'm working, and sometimes I work really long hours. So overall, I like to figure out ways that I can still be trading, still be making money while I'm doing these other things. Maybe someday I'll be in a position where I'm just 100% trading and that's all I'm doing, and that would be great. If so, I'll do things a little differently. But because right now that is not my situation, and it might not be your situation, so figure out ways to implement trading into your life that fits smoothly into your situation. Because I tell you what, as soon as it doesn't fit smoothly and the novelty is over, you'll stop doing it. So you got to figure out a way to keep doing it, because a lot of this being successful at trading, it just comes from time of doing it. Think about swimming in the water. Trading is a lot like swimming in the water. You can read a textbook on how to go swimming. Eventually, you got to get in the water. But when you go down to the third floor of the apartment building I live in and you get in our swimming pool, that's going to be different than if you go down the road over here and you get into the ocean. And that's going to be different if we go even further down the road and you get into the ocean at Sandy's Beach. They're all going to be different, but it's all swimming. So depending on what you're swimming in, it's still the same stuff. You got to keep your nose above the water. Don't swallow the water. You got to use your arm and legs. You got to do them in this choreographed kind of way. And depending on, like how fast or whatever you're trying to do to swim, all these things come into play. So that's you doing your strategies and stuff like this. And then the water is whatever the market's doing. And probably you could say what the market's doing, what your lifestyle is. You got 3 kids and you're running around to school and stuff like that, and you're working a job and you got to pick up your wife and you got whatever, an elderly grandparent. I don't know what you got going on. You know what you got going on. So you need to figure out how you can implement the stock market, which is not going away. It is here to stay. It was around before you were born. It's going to be around after you were born. It's only getting better because you have easy access to it with the internet. You can click a button, you can transfer money from your bank account into your trading account and back when you need it. In fact, I've got a debit card hooked up to one of my brokerage accounts, and I can just swipe my debit card and pay for stuff straight from my brokerage account. Now, obviously, I have to have enough liquid cash in there. I don't think it's going to sell some stock for me in order to pay for it. So the fact is, though, it's just getting easier and easier. So it's up to you to get into the paper trading. Don't risk your real money. Don't risk your real money until you validate it to yourself that you know what you're doing. You might start falling victim to this thing of like, but I know I'm going to make some money here. I paper traded. I made $500 or whatever. I made $50. I made $3. Whatever it is. That wasn't real money. Hey, don't worry about that. Think about being a doctor. Are you going to, when the whole time you're in med school, are you going to be upset that you're not making all this money? Like, man, I'm cutting up this dummy. I'm giving this dummy drugs. I'm doing all this stuff the right way. I could be making real money. Oh, you got to go through this process of making sure you know what you're doing. In the medical world, maybe you get a malpractice lawsuit. In the trading world, you lose your money. And if you're married, if you got kids, you don't want to be losing money. Right? I don't know what your situation is, obviously. You know what your situation is. But I could see somebody's situation being that they're married. Their spouse is a little bit like, I don't know about this. Whatever, my cousin Joe, he lost all his money. He's going to lose all the money. Don't be causing fights with your spouse and stuff. It could be like, whatever, your wife, your husband, whatever it is. Hey, babe, I'm paper trading. This is pretend trading. Before a lawyer can actually argue a case in court, the lawyer's got to go through all this school. I'm doing the same thing of being a lawyer going through school. I'm learning how to do this as a professional. In fact, in the United States, the quote-unquote land of the free, you can't even cut someone's hair without going to a year's worth of schooling. So I'm going to paper trade for a year because our finances aren't taking a haircut, babe. Love you. And keep trading. I don't know. You guys do whatever you got to do. But I'll tell you what. Paper trade. Try all this stuff. Go crazy. Go crazy in paper trading. Anything you can think of, try it because you're going to learn. If you're not trying it, then you're not learning as much. And of course, go to IHaveSuccess.com. Freudian slip. Go to IHaveSuccess.com. Download whatever it is. I'm figuring out how to create something for people to help bridge the gap with paper trading. And when that comes out, whoever's already downloaded some stuff, I send you stuff every day the stock market's open, stuff that I don't put anywhere else to try to give some value to people that I'm building more of a one-on-one relationship with. So you guys will get first crack to that. But I'm telling you, man, if you can see I'm on fire. It's like I am preaching the gospel of paper trading. It's the way to go. It is the way to go. Because I was talking about that situation about whatever, your wife or whatever. My cousin Joe lost all this money. Yeah, he did, because he wasn't paper trading. He was using his real money. It's like being a doctor, and you're going to learn how to surgery on cutting people open versus, using the cadaver or whatever. So paper trade. And if you notice yourself being a little hesitant, once you have the paper trading account, get over that hump, because it's fake money. And if you're not hesitant, then good for you. Go for it. Learn what you're doing. Learn how to swim in all these different currents, right? And right now we got a bear market going on, and that's great. It's a great place to be learning, because sooner or later the bear market's going to be over. There's a saying: don't confuse brains for a bull market. So when the bull market starts going up, you're going to make even more money, because you learned how to be successful in a bear market. And then all the Johnny-come-latelys are going to come during that bull market, just like they did in the past, and everybody's going to be making all this money. And then sooner or later we get a bear market again, and they disappear, because they confused brains for a bull market. Don't do that. Educate your brain with paper trading and all these other resources. You guys have a fantastic day. I'll talk to you later. Bye-bye.